People don't struggle with money because they are bad at math. They struggle because they allow hundreds of daily, invisible decisions to pile up without a system to manage them. Over the next 6 minutes, we are going to build a 90-day reset plan that organizes those decisions into a fully automated wealth-building machine. Step 1 requires data. Pause this video, open a blank spreadsheet, and pull up your last 3 months of bank and credit card statements. Every profitable business tracks exactly what comes in and what goes out. Applying that same strict operational protocol to your personal life is the mandatory foundation for building wealth. Take those 3 months of raw expenses and log them into 3 strict categories: fixed costs like rent, discretionary costs like eating out, and debt payments. Once they are logged, sort these categories from largest to smallest. This reveals your true baseline, exactly how much you spend on average every 30 days. For now, ignore fixed costs like rent. Instead, we are looking for the lowest hanging fruit, those discretionary habits like weekend ride shares or forgotten subscriptions. Identify the root habits like drive your spending, like calling an Uber when you could walk. In this example, targeting a 10 to 30% reduction in these specific discretionary categories over the next 90 days creates the initial surplus. By taking your monthly income and subtracting that optimized expense total, you reveal the capital you have left over. In a business, this is your net profit. Extracting this validated monthly average cures financial overwhelm. You now have a clear, factual starting point for the rest of the reset. Now we put that profit to work. Open a high-yield savings account. Right now, these accounts are capturing competitive market rates of around 4%, paying you for your deposits. Next, set up an automatic transfer. Configure it so that on the exact day you get paid, 10% of your paycheck moves directly into that high-yield account before you have a chance to spend it. If you have a credit card balance, call your issuer. Tell them you've seen more competitive rates elsewhere and ask them to lower your APR. It takes 5 minutes and directly reduces the amount of interest you owe every month. If they say no, focus on the payment size. Adding even a small amount to your minimum monthly payment accelerates the payoff tape and reduces the total interest the bank collects. For a $2,500 balance, adding just $75 to the standard payment shaves 8 months off the timeline and saves you hundreds of dollars in interest. By removing human willpower through automation, you guarantee that your debt shrinks and your first $1,000 emergency fund builds itself. Once you have an emergency buffer, open a brokerage account and automate the recurring purchase of an S&P 500 ETF. This fund buys you a slice of the top 500 companies in the US. Relying on its historical 8 to 10% average return is more effective for most people than attempting to pick individual stocks. This chart shows the long-term impact. Investing $1,000 a month at an 8% return compounds over 30 years, hitting a final balance of $1.49 million. To increase the speed of this growth, identify one strategy to increase your income this quarter. Pitch a raise, start a side hustle, or invest time in learning a high-income skill. While your expenses can only be cut so far before you hit a floor, there is no fixed ceiling on what you can earn and reinvest. To measure your progress, you need to track your net worth. This is the simple result of subtracting your total liabilities from your total assets. This tracker shows the calculation. If you have a $100,000 house and $25,000 in the bank, but owe $30,000 on a car, your final net worth is $95,000. Write down one specific, quantifiable savings goal for the next year and share it with someone you trust. Documenting your goal and sharing it makes you significantly more likely to achieve it. Now, open your calendar app. Set a recurring reminder to check in on this system at the end of every quarter. Combining written goals with scheduled audits transforms vague financial anxiety into a predictable, trackable strategy. The engine is running. Your savings are automatic, your debt has a fixed expiration date, and your net worth operates on its own track. The heavy lifting of the 90-day reset is over. You have moved from a state of reacting to your money to a state of managing it. The system runs automatically, but maintaining the growth still requires your disciplined observation during those quarterly audits. With the foundation in place, you can now focus on the major milestones. To see how your wealth accelerates after you cross the $100,000 net worth mark, click the next video.